Welcome back, guys. Coming up in today's video, 4 stocks that are on the verge of giving powerful breakouts. Make sure you watch the discussion on all 4 so that you don't miss a great money-making opportunity. Before we dive in, remember these stocks are best suited for short-term swing trades, mainly driven by technical charts with just a touch of fundamentals for added context. This isn't investment advice. Let's dive into the technical chart of the first company on the list today, analyzed on the daily time frame. This stock previously hit a high of $157 on March 8th, 2024, and its current market price is just around 1.3% below that level. Now, what does that tell us? Well, it's signaling that the stock could be poised for a strong breakout after a 10-month consolidation. If this happens, you'll want to pay attention to a few key factors. Look for a solid volume buildup before the breakout to avoid falling for a fake out. Without strong volume, price movements can be deceptive. Another important observation is that the stock price is trading above its 50 and 200-day exponential moving averages, which is generally a strong bullish indicator. Now, here's where it gets interesting. The pre-market price is already showing a breakout, which adds even more conviction to this setup. However, as always, remember to keep your risk management tight. Have a clearly defined stop loss in place to minimize potential losses if the breakout fails. Shifting gears, let's briefly talk about this company's operations and fundamentals. This is a tech sector company with a market cap of approximately $17 billion. It's primarily engaged in manufacturing services and solutions. The company operates through 2 key segments: the Electronics Manufacturing Services, EMS segment, and the Diversified Manufacturing Services, DMS segment. EMS focuses on leveraging IT, supply chain design, and core electronics technologies, while DMS offers engineering solutions emphasizing materials science and precision tooling. The company generated an income of approximately $1.29 billion on sales of over $27 billion, with a profit margin of 4.71%. It has a price-to-earnings ratio of roughly 15 and an earnings per share of $10.42. It also provides a dividend yield of 0.21%. And the company's name is Jabil, and its ticker is JBL. Now let's move on to the next one. Let's jump right into the technical chart of the second company on today's list, analyzed on the weekly time frame. This stock previously hit a high of $402 back in March 2021. Fast forward almost 4 years, and its current market price is hovering just around 1% below that level. What does this mean for traders? It indicates a strong potential for a breakout after a prolonged consolidation. Now, here's the kicker. From its lows in April 2024, the stock has already rallied close to 275%. While this is impressive, it also serves as a reminder to approach cautiously, since such large rallies can sometimes lead to profit-taking. Technically, the stock is trading above both its 50-day and 200-day exponential moving averages, which is a bullish signal. The pre-market price already suggests that a breakout might be brewing. But as always, the volume is critical. Watch for a spike in volume as the stock approaches its resistance. A breakout with low volume can be a false signal, so keep that in mind. All right, let's take a quick look at the fundamentals. This company belongs to the technology sector and has a market cap of roughly $24 billion, placing it firmly in the mid to large cap category. It focuses on selling equipment and providing related software platforms. The company's business is divided into 2 primary product types: enterprise technology and service provider technology. For the fiscal year, it generated an income of $390 million on sales of about $2 billion, resulting in a healthy profit margin of over 19%. The stock has a price-to-earnings ratio of 61, with earnings per share coming in at $6.45. The name of the company is Ubiquiti, and its ticker is UI. Stay tuned as we explore more opportunities. Guys, every week I share at least 3 videos discussing stocks at crucial levels. Before we move any further, let me remind you, your comments and subscriptions not only help boost the channel's reach, but also inspire me to keep going. Let's dive into the technical chart of the third company on today's list, analyzed on the daily time frame. This stock reached a recent high of $255 on July 11th, 2024. Since then, it entered a downtrend, repeatedly facing rejection from a well-defined trend line visible on the chart. Now, here's where it gets interesting. The stock's current price is just about 2.5% below that trend line. This signals that it might be on the verge of a breakout after nearly 6 months of consolidation. However, traders should keep an eye on an immediate resistance level at $182. Breaking past this level could pave the way for further upside, but if it fails to do so, there's no need to panic. Other opportunities always exist. On the technical side, the stock is exhibiting a classic setup where a breakout could lead to a strong upward move. Now let's shift gears and briefly explore the fundamentals. This company operates in the technology sector and has an impressive market cap of $141 billion, making it a mega cap stock. It provides manufacturing equipment, services, and software to the semiconductor, display, and related industries. Its operations are divided into three primary segments: semiconductor systems, global services, and display markets. In its most recent fiscal year, the company generated a substantial income of $7.18 billion on sales of $27.16 billion, translating to a robust profit margin of over 26%. The stock trades at a price-to-earnings ratio of 20.17, with earnings per share coming in at $8.61. It also offers a dividend yield of 0.8%, which may appeal to long-term investors looking for steady returns. The name of the company is Applied Materials, and its ticker is AMAT. Stay tuned for the last stock on today's list. Let's dive into the technical chart of the fourth and final company on today's list, analyzed on the daily time frame. This stock reached a recent high of $49.60 on October 16, 2024, before entering a downtrend. Since then, it has faced repeated rejections from a visible trend line, signaling resistance that traders should be mindful of. Now, here's the exciting part. The stock is currently trading approximately 2% below that trend line, hinting at a potential breakout after just 3 months of consolidation. However, an immediate resistance level at $41 is worth noting. If it clears this hurdle with strong momentum and volume, it could signal the start of a significant upward move. Watch for volume buildup during the breakout attempt, as it will help differentiate between a legitimate breakout and a false signal. This setup is particularly appealing to those who value technical precision. The stock's price action is aligned with bullish technical patterns, but like always, managing risk is critical. Set a small, clearly defined stop loss to limit potential downside if the breakout doesn't materialize as expected. Moving on to the fundamentals, this company belongs to the real estate sector and operates as a real estate investment trust, commonly known as a REIT. It specializes in acquiring, owning, and developing properties leased to retail tenants under long-term net leases. With a market capitalization of $7.35 billion, this is a mid-cap company in its sector. The company's financials are solid, with an income of $394.94 million on sales of $867 million, resulting in an impressive profit margin of over 45%. The stock trades at a price-to-earnings ratio of 18.15, with earnings per share at $2.16. For dividend-focused investors, this stock offers a standout dividend yield of 5.84%, making it particularly attractive for those seeking income-generating investments. The name of the company is NNN REIT, and its ticker is NNN. All right, that's it for today's analysis of 4 stocks with breakout potential. I hope you found these insights helpful. Remember, the goal isn't to guarantee success, but to highlight opportunities with strong technical setups while managing risks with clear stop-loss levels. If you enjoyed this video, please like, subscribe, and hit the notification bell so you don't miss future updates. Let me know in the comments which stock caught your attention. Thanks for watching, and I'll see you in the next one.